Archer and Joby Aviation. How are we going to navigate this bull run? So let's help clear your minds. Whether you're a long-term eVTOL bull or you've jumped on the urban air mobility hype for quick profits, let's get right into Joby and Archer's bull run and see how we're going to navigate it. Stop guys, I want to know who is up the most in both Archer and Joby, so please drop your profits in the comments. First up, I'll speak about Archer Aviation's surge. Don't worry, I'll be swapping between Archer and Joby throughout. So speaking about the recent stock performance, over the past month, Archer Aviation stock has surged an astonishing 141%, reaching $7.47 per share, with a market cap of $3.21 billion. Today it experienced a 27% increase, which has sparked widespread interest and discussion among investors. But what factors are driving this surge? And how sustainable is the growth trajectory for both long-term investors and short-term traders? Let's talk to driving factors. So I've come up with 4 driving factors for this. So at number 1, we have technological breakthroughs. Archer Aviation's advancements with midnight aircraft have showcased their ability to deliver on the promise of urban air mobility, attracting investors eager to back this cutting-edge technology early. At number 2, we have regulatory milestones. Progress towards the FAA certification is a significant driver, as it's a critical step for any aviation company looking to commercialise its technology. So at number 3, strategic alliances. Partnerships with major players like Stellantis for manufacturing and United Airlines for potential aircraft orders provide both validation and a revenue pipeline. And number 4 is a big one today. Investor sentiment. The speculative nature of investing in emerging tech sectors, particularly those with high impact like urban air mobility, fuels stock surges just like we've seen today as part of a broader industry hype. So let's now discuss the sustainability of this bull run for each type of investor. For the long-term Archer investors, the growth trajectory might seem sustainable if Archer can continue to innovate, secure necessary certifications and expand its operational footprint. Long-term investors should focus on Archer's ability to scale production, enter new markets and adapt to evolving regulatory landscapes. However, they should also consider the company's financial health, including cash burn rates and capital raising strategies to ensure the growth doesn't come at an expense of the future stability. For the short-term investors, the current surge offers an opportunity for quick gains. Normally this happens when there's positive news or further partnerships. However, they must be cautious of potential corrections if the market sentiment shifts or if there's delay in issues in development or certification processes. Short-term investors might look to capitalise on announcements or market news for immediate gains. So what am I doing with my Archer shares? I'm not selling, I'm not buying. I have a philosophy where I only ever buy on red days. I'm like a shark. I buy when there's blood in the water and everyone is scared. On the green days, when everything's going swimmingly, I do nothing, I just enjoy it. However, don't take me for financial advice. Let's waste no time and let's jump into Joby Aviation stock surge. So Joby's stock performance has seen a rise in 38% over the past month, with an 18% jump today. This brings it to $8.40 per share, which has propelled its market cap to $6.4 billion. So let's ask this question: what factors are driving the surge? And how sustainable is the growth trajectory for both long and short-term Joby investors? So if you lucky Joby investors, I've 3 driving factors. So at number 1, we have technological leadership. Joby's advancements in electric vertical takeoff and landing technology focuses on range, speed and efficiency, positioning it as a leader in the urban air mobility field. At number 2, Joby has strong partnerships. The significant investment and partnership with Toyota not only provides financial backing but also manufacturing expertise, which is invaluable for scaling operations. And then at number 3, we have market sentiment. The broader optimism around the future of urban air mobility, backed by Joby's market positioning, contributes to speculative investment and stock price rises. What am I doing with my Joby shares? Again, I'm holding, with the same philosophy as before. Now let's talk about the sustainability of this bull run for both long and short-term investors. For the long-term investors, Joby's trajectory could be sustainable if it maintains its technological lead, navigates regulatory approval smoothly, and successfully commercialises its services. Investors here should monitor Joby's progress in certification, operational development, and how it manages its cash reserves and additional funding needs. For the short-term traders, the enthusiasm around Joby presents trading opportunities. They should be ready for the volatility. Positive developments or news can drive the stock further up, but any hiccup in the development, certification, or competitive landscapes could lead to a quick correction. Now let's get into the big stuff. What is the risk factors and volatility for both companies? But before we do that, eVTOL Weekly is nearly here. At 1,000 subscribers, we're doing a weekly Archer and Joby live streams, so you know what to do. How should investors interpret the volatility seen today's significant stock increases? What strategies should both long-term and short-term investors employ to mitigate risks associated with competition, technological hurdles, or market saturation? In regards to interpreting volatility, for all investors, they should be on watch. The volatility seen today is symbolic of the high risk, high reward nature of investing in emerging tech like eVTOLs. It's a signal to both long-term and short-term investors to proceed with caution, understanding that's why there's potential for significant returns in this industry, but there's also a risk of a rapid price drop. Looking at strategies for competition, long-term investors should analyse how Archer and Joby differentiate themselves from competitors through technology, partnerships, or market strategy. The focus should be on sustainable competitive advantages. Whereas when we look at the short-term investors, they need to stay informed about competitive actions. For instance, if a competitor announces a significant partnership or technological breakthrough, it might affect the stock price of both Archer and Joby in the short term. This can be both positive and negative. Looking at strategies around technological challenges, long-term investors should investigate how each company addresses research and development, particularly in areas like battery technology, autonomous systems, and aircraft design. Long-term investors should also consider the company's adaptability to technological shifts or setbacks, whereas short-term investors need to be agile. If there's news of technological breakthroughs or setbacks, these can represent buy-in or sell-in opportunities. Short-term investors should always use a stop loss to protect against sudden drops. A market saturation strategy would be long-term investors should look if both Archer or Joby are looking at diversifying beyond just passenger transport. Are they looking at cargo, emergency services, or other applications? Long-term investors should watch how these strategies unfold to mitigate saturation risks. Short-term investors should monitor the urban air mobility market schedule closely. If multiple companies are set to launch commercial services just around the same time, this might signal a potential oversupply, affecting short-term investment decisions. As a general rule, I like to say, long-term Archer and Joby investors should focus on the overarching trends in urban mobility, sustainability, and technological adoption. Their strategy might involve regular portfolio reviews to ensure alignment with the company's progress and market developments. Whereas when we look at a short-term perspective, for those looking to capitalise on volatility, active trading based on news, earning reports, and partnerships could be lucrative. However, setting clear profit-taking points and stop losses is crucial. I've got one final question for you, but first let me say this. For both Archer and Joby Aviation, the current market enthusiasm represents both opportunities and cautionary tales. Long-term investors will thrive in focusing on companies' foundational strengths and market adaptability, while short-term investors can navigate the waves of market sentiment, always with an eye on the horizon for big shifts in the urban air mobility landscape. Have you ever wondered if you could be a millionaire with Archer and Joby Aviation? And have you wanted to know how many shares you would need in 3 bullish cases? Well, I've done it, and I'll meet you there next.